and their interest rates have been behaving for a long time. I mean, not recently. So I think the long end is essentially unpredictable. When investors worry about it rising too dramatically, then I think that's when the bond market can have some influence on both the Fed and the Treasury. But I think at these levels, it's not that alarming.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Tom Lee shares smart, data-driven insights and market strategies. Let's break it down and see how you can invest smarter.
Do you, Tom, at this point think that interest rates, because it doesn't matter whether we reduce or not, that would the long end go up if they reduce the short end because of 37 trillion or this bill that's the big beautiful bill? Are there worrisome things on the horizon other than inflation, current inflation?
Well, yeah, the U.S. is on an unsustainable sort of path for deficits, but Japan's actually had higher rates and their interest rates have been behaving for a long time. I mean, not recently. So I think the long end is essentially unpredictable. When investors worry about it rising too dramatically, then I think that's when the bond market can have some influence on both the Fed and the Treasury. But I think at these levels, it's not that alarming.
What's Bitcoin? What is it moving with? Just risk assets at this point? It got back to an all-time high, which you were forecasting as well. But now I think, what are we, 104 this morning? So it's pulled back.
Yeah, I think it's consolidating. It makes sense. You know, Bitcoin is responding to global liquidity, which is moving up, and I think anticipating a dovish Fed next year. So that's a tailwind for Bitcoin. But, you know, Bitwise has a great stat. You know, 95% of all Bitcoin's been mined, but 95% of the world doesn't own Bitcoin. So I just think that there's still a huge demand versus supply imbalance, meaning there's a lot more potential buyers of Bitcoin over the next 10 years. And so I think there's a lot of upside into year end.
Into your like 150 target.
Yeah, 150, maybe 200, even 250 this year.
What? 150 to 200 to even 250. And what's you don't have a terminal price on that, do you?
Well, it's I think at a minimum it should have the same network value as gold. Mm-hmm. And if you look at above ground gold, it's probably 23 trillion. So that would be, you know, 1.2 million for Bitcoin. But I think Bitcoin is more valuable than gold. So, you know, Bitcoin could be 2 million, you know, 3 million long term. I mean, even higher.
Okay. Thank you. And we're talking years, obviously, but 95% mined. I don't think the last one is mined till what, 2150 or something.
Yeah.
It's getting harder and harder.
Yeah. I mean, depending on what decimal you want to use, it's probably like, you know, 2040 or something. But yeah, but if you're having something forever, it'll always.
So what's your terminal value?
That's what we just said.
Yeah, I mean, the final.
We said 2.5 million.
2.5 million at the end.
Yeah.
Or maybe higher.
Or maybe high.
I didn't appreciate at that point.
Yeah, I mean, it could, you know.
But I guess what the way I meant that is, does that happen at the end after it's all?
When it's all mined.
When it's all mined?
Yeah, and there'll be network fees generally.
Or does that happen before it's mined?
It's like as if Berkshire did a buyback and there was only one share left. What would Berkshire's share price be?
Bitcoin may be gearing up for its next move higher as a key group of long-term holders begins to slow their selling. According to Glassnode, investors who have held Bitcoin for 3 to 5 years, often referred to as OG holders, were behind much of the recent price correction. But now they appear to be showing signs of selling exhaustion, a development that could mark a positive shift for BTC's price momentum. These experienced holders resumed heavy selling in April after reaching a supply peak of 15.7% back in November 2024, the highest since March 2017. The renewed activity in the market led to a sharp drop in supply held, now down to 11.9%. While still well above historic lows, this suggests the recent profit-taking may be slowing for now. Historically, These long-term holders tend to sell into strength, meaning they often take profits during rallies. Their latest spending spike in this cycle hit $2.16 billion, making it the second largest outflow after March's $6 billion dump. But with current signs pointing to a pause in sales, Bitcoin could be setting up for another leg higher. Still, any future rally will likely face resistance again when these investors decide to offload more of their holdings as BTC approaches higher price zones.
I think they've exceeded your targets they were a couple of months away from where we are right now, and we're already there. So you're raising your targets overall?
Yes, I think, when at the April lows, we thought we could make a move back to 5,500.
Right, we're at 5,900 on the S&P.
That's right. But our full year target was 6,600. So I think that's still a reasonable expectation.
You never changed that.
We haven't changed it.
Never did. Even on April, at the week of April 2nd or 7th or 2nd, you didn't change it.
No, it felt very shaky because that would have been, a couple 1,000-point move needed. But now that I look at 2026, I think businesses are in better shape now than they were in February. So I think making 6,600 actually seems more achievable today than it did in February.
You think a bull market started April 7th, or a new bull market started April 7th? In everything, because the NASDAQ already, if you just use 20% to measure what is an actual bull market, people think we need a broader indicator, a broader reason to call something a bull. But at this point, I think the S&P is also in a bull market.
Yeah, I think that the waterfall decline into the April lows was such a reset of sentiment. People talked about Armageddon, and we saw some of the most rapid deleveraging of hedge funds ever, and a collapse in investor sentiment, and a huge change of positioning. So those are, I think, things that look like what happens in a bear market. And the ISM has never broken above 50 in a sustained way. Market tops usually need an ISM to stay above 50 for a period of time. So I think we're at the start of a bull market. And as I look at 2026, I think housing could actually be a big lever to pull next year.
What do you think of the recent inflation data? And is it real? Is it lasting? Is it going to turn around and head back up because of tariffs? Were you surprised at those numbers on the last couple of Friday and then a couple weeks before that?
Well, as you know, the inflation for the last month actually has defied expectations because a lot of people said these shortages would cause a spike, and instead core inflation actually has been trending lower. But to me, inflation was really a story about housing and auto insurance. Those were powering inflation for the last 2 years. I mean, combined, that's 75% of the rise in inflation. Housing is actually now subtracting from inflation month over month. And I think in some ways, on a real-time basis, that tells me I don't think core inflation is actually going to be turning up, even if goods prices go up.
You don't?
No, I kind of agree with Waller's comments.
You do agree with Waller's comments?
Yeah.
So you're anticipating cuts, several cuts this year?
Well, I think that if core inflation behaves, then we are in a really tight real rate environment, right? 4.5% monetary policy and 2.5% or 2% core inflation. I mean, there's a need to actually reduce interest rates.
Norwegian Block Exchange, NBX, just made a bold move that sent its stock soaring 138% in a single day. On June 2, the Oslo-based crypto platform announced it had purchased 6 Bitcoin worth around $633,700 at the time and plans to grow that total to 10 BTC by the end of the month. Investors responded quickly, pushing NBX shares to €0 and 33 cents, $0.38. A massive jump, though still far from its January 2022 high of €0 and 93 cents. NBX isn't just buying Bitcoin for the headlines. The company plans to use its BTC as collateral to issue a Cardano-based stablecoin called USDM, while also generating yield within the Cardano ecosystem. Their long-term goal is to become a digital asset bank, with Bitcoin-backed loans part of the plan. The exchange says it's also in talks to raise more capital for additional Bitcoin purchases. This move aligns NBX with a growing number of Norwegian firms entering the Bitcoin space. Aker ASA holds 1,170 BTC through its CD subsidiary, and brokerage firm K33 recently raised $6.2 million to buy crypto. Even Norway's sovereign wealth fund has indirect exposure. As Bitcoin continues to be embraced by both institutions and companies worldwide, NBX's aggressive strategy signals just how seriously some firms now view Bitcoin's role in the future of finance. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.